What's going on, guys? I am Stock Sniper Mike, and today we're going to be going over the first green day momentum shift pattern. Now, this pattern is something that the snipers have recently been taking advantage of with the downward trending market. We were just testing it out a couple times to start the week, but now we're a couple weeks in and we are 11 for 13, over $3,500 in trading profit from this one sniper pattern in the span of 3 weeks. So we might as well go over it and talk about how it's done. A lot of traders out there know about the typical first green day pattern, multiple downward days, or just flat line, and then you have a first green day. Now with this one, this is very similar to that bounce first green day, but we're trying to catch it early and before the first green day starts. So before I give you a couple examples of how we were able to profit on it, I'm going to go down the checklist that we look for before diving into one of these plays. Most of our profit has came off of OTC stocks, but most of these plays come in the listed market. We've used this strategy to adapt to the downward trending market. It's been an ugly past year and a half, and this year started with the bounce, but it looks like we're coming back down. So this strategy works great with that downward trending market, just adapting to something new. Now, the number one thing we look for is a stock that has multiple downward trending days. We need that multiple downward trending day to finally create a red to green move, and that's when we look to take advantage of it. But it's not any stock that makes a red to green move. We have to have certain criteria that line up on our checklist for us to go after it. Number one, we need the stock to be coming down to some sort of long-term support or former breakout. You don't want to just catch a falling knife. It's very, very hard for you to just catch a 52-week low. We want to see the stock coming down to an area that it's held before. This is technically like catching a falling knife, but there is a floor, and the knife could possibly bounce off this floor, and we're just trying to see if it does. We're not telling you to buy there, we're just eyeing down that specific spot. Now, if we do have multiple downward days and we are coming down to that spot, we want to see the stock now create a red day right down to that level and start to level out there. We need to see a tight range. That's the next thing we're looking for. So now we have multiple downward days coming to a long-term support, and now the day that it does reach the long-term support, we have to have a tight range between the high day in the morning and that long-term support or breakout level. Now, once we see that tight range, we're looking for that red to green move. We're looking for the stock to come back up after it held support and break above the high day that it started with that day. Once it breaks above that high day, that's an official momentum shift, and that's where this play starts. You can be early and you can buy the play down by support and really be riskless, or you can get a little more risky and wait for the play to actually play out and buy it where that red to green breakout is. No matter what happens, you want to make sure to stay tight to your risk and have a 2 to 3% risk when risking these plays. For the most part, we like to use low a day cut, but if the high a day is a little too high percent risk wise from that, then we would just use that red to green breakout spot as the cut. No matter what happens, you want to stick to the cut. That's the number one plan. And you also want to let your winners win. So now let's dive into a couple of these plays that we've been able to take advantage of the last 3 weeks. So I'll just give you 3 quick examples, and then we'll go on our way, and hopefully we can profit off these in the upcoming weeks. The first one I'll go over is listed penny stock MULN, MULN. This is our number one stock in 2022. We made the most profit off of it, and we're coming back again in 2023, going 3 for 4 on this stock. This created a perfect momentum shift play as it was downward trending after multiple red days, exactly what we look for, coming down to long-term support of 21 cents. Now, if you are on the sniper team, you'll be prepared for these plays because we always put them on our weekly watchers watch list, which is released every Monday morning, and then we put them on the morning watch list, which is released every single trading morning at 9 a.m. And MULN was right on there. Here is a live trading to show you exactly what we are looking for and how we took advantage of this move. As you can see, MULN had a high of 2223 and then came back and bottomed out exactly at that 21 cent area. 21 cents would have been perfect grab right here, but we stayed patient, made sure it bottomed out there, and we decided to get it at high a day. As it started to come up to that high a day of 2223, we got in it as it broke above 22, and we were now risking that low a day. So 21 cent risk, 22 cent buy. A little more risk than we like, 5% there, but still right in range because the ratio is still 3 to 1. But if we really felt uncomfortable, we can just get out at the red to green breakout. Remember, this is a momentum shift play and you're playing the momentum upward. So when the momentum comes back down, it's almost a waste. The play is over. You want to be taking advantage of that momentum and you want it to continue. And that's exactly what happens with MULN. You see a breakout of 2223 here, and it never comes back down to that spot. It actually spikes all the way up to 24 cents, and as it breaks above 24 cents, we start to think about where should we take this bag, and we decide to grab the bag right around $1,000 in profit and right up there above 24 cents, as we were able to make right about 15% in the span of about 30 minutes. So great move there and a perfect example of the red to green momentum shift play. The next one we're going to go over happened 30 minutes later. So we were eyeing both these plays down on the morning watch list. We were looking for this to happen from the weekly watch list. Then we eyed them both down on the morning watch list. HLBZ is that next play. And we have the same checklist and we're checking off the same type of things. We are looking at multiple downward trending days. We are looking, the stock hasn't made a red to green move in a while, and it's coming down to long-term support of 11 cents, which is also 52-week lows. So now let's see what can happen in HLBZ. From the morning watch list, we're watching it to hold 11 cents. It comes down to 11 cents, and it holds it perfectly. The high a day spot was 11.5. So 11.5 to 11 cents is the ideal situation. That is a very tight risk, and you're only risking 2% if you're buying at the high a day and selling at the low a day. This is the ideal situation in the red to green move. As it starts to make that red to green breakout, we decide to get in, and we get in at this 11.5 spot. As we get in at the 11.5 spot, it continues to break and off to the races it goes. It gets all the way up to 12.5 and it gets some trouble there. That's actually where we decided to take our first bag, and we highly regret it because as you can see, momentum, this is a momentum shift play. And remember, we say play the momentum, and then once it starts to lose that momentum, get out of it. With this one, as it came up to 12.5, we thought it was losing momentum, but it never really slowed down. It actually never dipped. 12.5 was the high a day from the day before, and it was just breaking out and changing momentum from that spot. So that was two signs of momentum shift. You had the daily 11.5 breakout, and then you had the next day from day before high day breakout at 12.5. Once both of those break out, the stock was able to soar all the way to 14 cents. After leveling out at 14 cents, it actually continued to the follow-up green day all the way to 22 cents. So just about 100% in one day from our buy alert there on HLBZ. So some of these spikes going large, some of these not going as large. Either or, they are still working out, and they all have tight risks with minimal downside. And that's key in the stock market, especially during these times while the stock market is going down, down, down. You want to protect your funds at all costs. Hopefully you guys enjoyed this video, and hopefully you learned about a new pattern or a pattern you've heard before and you're ready to take advantage of it. If you'd like to tag bags with us on this pattern, check us out on our website at thestocksnipers.com or on the App Store or Google Play under StockSniper. We have a great community of teams. We're also posting videos 3 times a week, so make sure to click that subscribe button below on our YouTube channel. Looking for this pattern to stay hot and looking to continue to tag bags off. Stock Sniper Mike, out.